Welcome to another episode of the Dani Ariza Podcast. Today I am with Mohamed Kandil
Yep, you
from,
got it.
let me get it right, Goosehead Insurance.
Goosehead Insurance, the Kandil Hindi agency in
Perfect,
Mountain
perfect.
Lakes.
How's it going, man?
Good, man. Can't complain. I'm glad to be here. Thanks for asking me to be on the show.
No, thanks a lot for coming. We were just talking off camera that, I haven't seen you in a while. It's been
I
quite a
know.
minute, yeah.
It's been a hot minute.
Yeah. How's the team doing? You were saying that you're expanding.
Yeah, we're doing good, man. I feel like 2025 is the year of growth for us. We're a team of 5 producers right now, 1 office admin, but we're really looking to bring on more producers as the years progress. I think we want to shoot for 2 more by the end of the year. So
Nice.
yeah.
And how long have you had the office?
So we've been in business for 6 years now, actually this month.
Oh,
So
wow.
we just hit our
Congrats.
6-year mark. Thank you very much.
You must be doing something good.
No, it's been a wonderful ride thus far.
Yeah.
Yeah.
So how did you get into, how long have you been doing insurance?
So I've been in the industry 10 years now, actually about to be 11 years. I started working under an agent at State Farm as a producer. And I was eventually going to open a State Farm agency. So my first year in business at State Farm, I started on the agent aspirant program. And my expectation was always to open a State Farm agency. The year I was going to apply for agency with State Farm, I actually got approached by Goosehead. And I wasn't even taking it seriously. I was set all the last 4 years on my sights for State Farm agency. But when they approached me, the opportunity sounded too good to be true. I did my research. It actually checked out. They were built on really good bones. Their business model just appealed to me plenty. They're catered to the home buying industry. And I really enjoyed that model because 1, it meant my job was making friends, just with people in the home buying industry. 2, it made me see that what we do in insurance, it's more of an asset to people in the home buying industry than I realized. I didn't realize how much insurance can affect a closing, or how much it can literally be the difference between getting somebody in their home and not. So knowing what the company was capable of doing to be able to help these people get in their home was huge to me. And it transitioned my thinking from this is a sales job to no, we're actually protecting people's assets, and in doing so you move differently, you offer product differently. It's no longer selling, it's educating and advising and letting people decide how they want to protect themselves.
Yeah, because listen, everyone needs insurance.
Oh yeah,
Everyone needs some type of insurance, whether
Absolutely.
that life insurance and homeowners, business, whatever.
Definitely.
And we always what I realize being in the financial services industry is that when it comes to insurance, because it's needed, many people just think, oh, I'm going to go ahead and go with the cheapest one without
Absolutely.
realizing what is covered, what's not covered. And then as a mortgage in the mortgage industry, then we get some calls a couple of years later and say, hey, I had this issue, how does it work with insurance? Is this covered? So if you could tell me a little bit more about your approach to dealing with clients and what makes you unique.
Of course. So 1, to your point, yes, people always go for the cheapest insurance. And we have a saying in our office that sometimes the cheapest insurance you can buy is actually the most expensive insurance you can buy. The problem is there's not enough education happening in the insurance space. People think this premium looks really good, I'm going to go for this policy. It's going to cover me the same way that any other policy out there will. What they don't realize, and especially first-time home buyers, is that there's a lot of things that a lot of first-time home buyers assume are covered, but actually are not unless you add it onto the policy. And a lot of them are common homeowner losses. Something as simple as water backup. People just assume if that happens, I'm covered for it.
Water backup is when this...
a backed up sewer drain or some pump overflow or toilet overflowing.
Okay.
It's one of the more common homeowner losses that our clients face. And a lot of people, like I said, don't realize that that's not just automatically included. That has to be added. So we go on the coverage first approach and we educate. So since we work with so many carriers, it gives us the luxury of focusing on coverage first and then choosing the best price second, which is not common practice in this space. A lot of people, it's a sales job, like I mentioned earlier, and they want to make the premium look low to win the client in the door. With us, we use education and trust. So we have that luxury of working through so many carriers, covering it the same way, and then choosing the best rate. And then when I say educate, I'll never add something to a policy without advising the client and telling them that I added it, explaining how it protects them, and letting them be the last line of defense on their own policy. So I'll give them the rate first, and then I'll go through all of the coverages. I'll let them know all the things they can change, advise against it, of course.
Yeah.
But let it be their decision. Because if somebody is more price focused, that's okay. But you should decide what you're willing to sacrifice coverage-wise to get the premium lower.
Yeah.
And that way you also, there's magic in that, because that way you want the premium lower, you're willing to sacrifice this, but you also know you're not covered for this.
Yeah.
So you're not going to come to a situation where something like that occurs and you're blindsided by the fact that you don't have the protection on it. You knew you didn't have the protection on it.
Yeah, no, it's just like anything. I always tell people, look, like my job is to educate you and to help you make the best decision possible. But at the end of the day, you have to make the decision, because you're the one who's going to pay, not me.
Yeah,
you know,
definitely.
and as much as I want to be able to tell you exactly what to do, you know, many times it's a matter of helping you discover.
Absolutely.
You know what? So let me ask you, what other situation? What's the craziest situation that you have seen where they come back and say, "Hey, this wasn't covered"?
Yeah. Doesn't really happen much with us, because we do a lot of that preventative work and preventative education of like letting them know what they're up against or what would happen in a situation if they remove this from their policy. But that doesn't mean I haven't like heard horror stories. I've heard horror stories of total losses that were declined because the policy wasn't written correctly, or it was like a single family but should have been written as a multifamily, or it was a rental dwelling but they had it written as an owner-occupied homeowner's policy.
Because I can see that a lot happening.
So what people don't realize is sometimes you may think you're pulling one over by getting a lower premium by not exposing all of the information and all of the facts. But essentially, that puts you in a situation where you're actually paying more at the end of the day, because you're paying for a policy that you can't even use because it's not even written correctly. So it's very, very important. One thing, too, is like there are the standard things like flood insurance, and flood is like flood loss or water damage specifically from a nearby body of water. Most homeowners carriers, majority of homeowners carriers don't have an option to add flood coverage. It's a whole separate policy. You need flood insurance.
Yeah.
If you're in a high-risk flood zone, it's required, so you can't really get a mortgage without having it. If you're in a low-risk flood zone, it's not required to have, but you can still purchase it, and it's a lot less expensive. We always say like everybody is technically in a flood zone. It's just a matter of high risk or low risk. So we actually, on all of our policies, we have our clients sign off knowing that they're not covered for flood damage if they were in a low risk flood zone and decline flood coverage. So it's really just knowing like what your homeowner's policy covers and what it doesn't.
Now,
and
what affects the price on a flood insurance policy? Is it more of like how close you are to the body of water, the type of mortgage that you have, or like what are the different factors that go into it?
So mainly the flood zone, like if you're deemed AE, you're deemed AE regardless. And then the home itself, like if there's a if there's a basement, if it's finished, if it's unfinished, those are factors. Whether or not the home is elevated, that can affect your rating. If you want to cover contents versus not covering contents, because all the mortgage requires is the $250,000 dwelling coverage. Yeah. So even those in a high-risk flood zone aren't even required to have contents coverage. But if all your contents are damaged in a flood, then you don't have any protection on that. But every home is rated differently as it pertains to flood and as it pertains to homeowners. You can have two different people running a quote. on the same home and get two completely different on the same home, but two different people get two completely different rates, or you can have the same person on two different homes and get two completely different rates. So there are a lot of factors that go into how you're rated on homeowners. Not so much factors on the flood as there are on the home, but the address alone, like that specific location, can require higher flood premiums than other homes, even if they're both deemed zone AE.
Yeah. Now, kind of jumping into another part, but like I have seen some clients that will come in and try to get insurance in a house, and then they'll come back and like pretty much all the different companies come back and say, no, there's too many claims on that.
Yeah.
And my question, just not knowing anything about insurance, is like, okay, you know what? Like, how does it work that if the past owner had a lot of claims, why does it affect the future owner?
Yeah, so different carriers work differently. There are some carriers that look back 3 years on claims, some that look back 5, some that look back on just the applicant themselves, some that look back on the property, and then some that look at the applicant and the property. So it really depends on what carrier you're dealing with on whether or not it's going to affect you. But I see the logic in both. So like when they're looking at the applicant, then they're looking at the applicant's claim habits. Is this somebody that's going to call for anything and everything and have us paying out more on them than what we're taking in on new business, affecting our loss ratios, hurting us financially? When they're looking at the property, it's a testament to the property itself that they're insuring. So sure, it wasn't the new applicant, the person buying the home's loss, but it was the property's loss, and the property had already shown vulnerability to loss. So it kind of gives cause for pause with some carriers.
Yeah, because that's I just had a situation recently where like a lady couldn't find insurance, and it was because the past owner had put like something stupid like 10 claims or something like that.
Yeah, and a lot of it has to do with the current market too. So just to give you some background, we are in like the worst insurance market we've seen in almost 50 years right now. Inflation, so cost to buy, sell, rebuild has gone up, so rates have gone up accordingly. Reinsurance, most people don't know that every insurance company actually has their own insurance company that insures them and assumes risk with them.
Yeah.
And some reinsurance has gone up as high as 100% with some companies. So they had to raise rates accordingly. But the biggest one is loss ratios. So the amount, as I mentioned earlier, the amount that insurance companies are paying out versus what they're taking in new business premium is really bad and really tight ratios right now. So they're trying to recover financially. That is not only affecting rates. So they're not just all imposing rate increases to recover financially, but that's also tightening guidelines. So they want to take on really clean risks. They want to take on homes or dwellings that are going to have the least chance of having a claim. If there's a much older roof, that means that there could be a roof claim coming around the corner. So companies that may have looked back 20 years for roof are now only looking back 10 years for roof. Companies that didn't care so much about one loss within the last 5 years are now starting to care about one loss within the last 5 years. So it's not even that this is an issue that has always been going on as intensely as it is now. It's actually more intense now than it has been over the past few years for that reason. So because guidelines have tightened. But that's the good thing about like being with a broker like us is we can assess the situation. We'll always have a product for it. It could be a situation where we can't offer the best option, but just the best option that will accept all things considered. And I try to coach a lot of my realtors and lenders and educate them on those factors so they know what things to look out for, especially, in the mortgage industry. You do have to kind of give some sort of home insurance estimate just for working the numbers.
Which, by the way, and sorry to interrupt, but like I remember 3 years ago, I would come in and start and be like, okay, this is going to be $70 a month.
Yeah.
Now it's like, no, it says $150 a month.
That changed.
It just completely like, raising. Many people don't realize that on that payment, like, besides the interest, it's the taxes and the insurance. So many people end up focusing on the interest rate alone. Yeah. And then they say, how come the payment is so high? I'm getting a good interest rate. I'm like, well, look at the taxes. look at the insurance that you're paying depending on where you are. So yeah, insurance is a huge part of our business because we need sometimes we cannot qualify someone because the insurance policy is too high.
Yeah. And it's good, like as a lender, it's good to know all of the things that could cause an issue or drive rate nowadays. So that way you can set a more realistic expectation, because it could be something that seems silly. Like there could be one factor about the home that could cause a difference in $1,000 in premium just because the best option was $1,000 less and it's not eligible for that one factor.
Yeah.
It could be something like a prior loss. It could be something like the home isn't 10 or 15 feet apart from the next closest home to it. It can be that there's a flat roof. It could be that they have a dog, a vicious dog breed like a pit bull. So those are all things that it makes it hard to just give a generic estimate because there could be one little factor that you didn't know about that causes a huge drive in the rate.
Yeah. So let me ask you a few things that just came to my mind. So for example, see, if you own a house, I buy a 2-family home.
Yeah.
And I'm living in one, and the next one, in the next unit there's there's a tenant.
Yeah.
So do I need to get, part of my policy needs to cover that as the tenant as a.
You have to disclose it for sure.
You have to disclose it, right?
And that's going to be a factor too. Like there could be a carrier that only does single family homes, and if they come back on our radar as your best option, can't use them because you have a multifamily.
Yeah.
And then we would put you with the best option that will accept a multifamily, and you are covered for your full building. One thing that I always advise people with multifamilies is you should put in your lease that your tenants have a renter's policy, and that's for your own protection and for their protection, because you have a limit for personal property on your policy as the building owner, but your personal property limit doesn't extend to your tenant. You have a limit for liability on your homeowners as the building owner, but the liability doesn't extend to the tenant's liability that's incurred. So if they invite somebody over and they slip and fall, technically that's the liability of the tenant. But if they don't have a renter's policy, they don't have coverage for it. And lawyers like to get crafty. They're always going to shoot their shot for the homeowner's policy. Yeah. So it potentially puts you at risk too if your tenants don't have renter's insurance.
Okay. Now the next question, and this actually happened to me. So if there's a tree, this is my house. My neighbor has a bunch of trees. They're in his property. If one falls over and hits my house,
it's on your policy.
It's on my policy, right?
Yeah, they're acts of God. So anything that happens to your property that nobody like intentionally caused is going to be covered under your policy, even if it wasn't your tree. Yeah. And that's another thing too with these inspections. Sometimes if there's an overhanging tree over the house, it'll be a condition of the homeowner's insurance carrier to have the tree taken down because they foresee that risk. Yeah, no, I've seen people having to pay $5,000 to take a big tree. Yeah. Just because they're right there. Absolutely. It actually happened to me. My property is pretty big in the backyard, and there's a shed in the back and like right on the line. Oh no. And all of the sudden the storm, the tree comes down, and I'm thinking, okay, you know what? Hey, I called the neighbor. Yeah. The neighbor goes, okay, yeah, let me check with my insurance. Of course, he called the insurance and said, no, that's on them. Yeah. I'm like, oh, crap. That's one of the most common questions.
Yeah, and then I just had to. Yeah. I had to. Ended up, it was like $1,500, so I ended up just having to, repair it myself, and But
I'm really glad, actually, if you don't mind me interrupting, that you brought up that point. You do not want to put in an insurance claim for anything that's covered just because it's covered. You want to be wise and choosy about the things that you claim for. Yeah. Like a claim like $1,500, you might have $1,000 deductible, save you $500, but it's going to cost you so much more in the long run. Yeah. The amount of claims you have really affects your future rating, and it really affects your future eligibility. So you'd end up paying more in premium over the next 3 to 5 years than you saved in that moment when you put in that small claim.
Yeah. So 3 months later, I got a letter that they're adjusting my my insurance, and it wasn't that much. But I guess he just triggered, or God knows.
Did you? Oh, you did call to talk about the claim.
I did call, yeah.
Yeah. So
Yeah.
So I always say call the agent first before you call the claims department. I can't tell you how many people I've talked out of claims before it ever touched the claims department for that reason, because you're still exposing the risk.
Yeah.
So even a zero paid out claim can affect your future rating and affect your future eligibility just because you showed that there was a risk there.
Yeah, that's And my wife was like, "What the heck?" We pay for everything.
Yeah, it's the worst.
So what is really covered by a homeowner's policy, homeowner's insurance policy? Because I feel like, okay, so if you have an actual flood, that's not going to be covered.
Yeah.
If you have if there's a wildfire, that's not covered, right?
Earthquakes, not covered. Fire. So fire, it all depends on the cause of loss, because like, for example, fire is covered, like if there was a fire on the home, but like it's not like the actual cause makes a difference. It's not just the actual loss that occurred. Like water's covered, but it depends, how did the water occur? How did the water damage occur? If it involved negligence, that's not covered. If it involved old age, wear and tear, pre-existing damage, that's not covered. Insurance is really for the more sudden and accidental losses that occur, like the things that you can't control. Flood's a big one that's excluded. Earthquake is a big one that's excluded unless you include it. Some carriers actually give the option to add earthquake coverage. It's for a really pretty penny and with a really high deductible.
Yeah.
If the carrier offers it. But it really all comes down to how your policy is set up. Is it on basic peril? Is it on special peril? Special peril gives more causes of losses that would be covered. Basic peril is less causes of losses that would be covered. And then it all boils down also to how you're endorsed or what supplemental product you have. If you have equipment breakdown for your permanently installed home systems, if you have service line coverage for the buried utility lines that go underground, that's not going to just automatically be on any policy. Yeah. So it's hard to give a general answer because it really all depends on the type of policy form you're on that would dictate whether or not it's going to be covered. And in most cases, like when you issue a new policy, you get the full policy jacket. There's a section for exclusions. So it will highlight what things are specifically excluded. Like if you're on a broad peril form, everything's covered unless it's specifically excluded and stated that it's not.
Yeah. Now, if it's a hurricane, if it's a named storm, right? That's also not covered, correct?
So hurricanes are covered as long as you have wind and hail or hurricane on your policy. But there is also a difference. Like you'll see sometimes you can have a $1,000 deductible for all peril, like fire, theft, liability, water backup. And then you have a separate deductible for wind and hail. And then you can have the same deductible for all peril and wind and hail, but a separate hurricane deductible. But it is also a misconception that any named hurricane is going to fall under that higher hurricane deductible. It all matters on how fast the winds are. If the winds exceed a certain mile per hour, then it goes to the hurricane deductible, the special hurricane deductible. But if it's light winds, even if it's a named hurricane, it's still going to fall under the regular wind and hail deductible.
Yeah, because I'm just thinking about like, when was it, 2021 that we had the... Yeah, that was bad.
Crazy.
It was funny because I moved a month before.
Really?
And I still had a property in Elizabeth that I was selling. It was under contract. And I moved to Bridgewater. That was August.
Okay.
And then I spent the night, and I'm watching the TV, and I have this property that's supposed to close in 2 weeks. And I see like all of Elizabeth, it's completely underwater, and I'm like, oh my God, this cannot be happening.
Oh, man.
Somehow, thank God, we only got like a little bit of water inside the basement.
Nice, you lucked
but
out.
I guess the property was just high enough.
Yeah.
But that was
it shook you.
Yeah, I was like, no, let's get rid of this. Yeah, but it's tough. I mean, listen, all of these questions come to show that how important it is to have someone who's really advising you.
Absolutely.
Because they're so, I know there's people that that have like expensive jewelry in the house. There's people that have, fancy collectibles or whatever it is. And it's just like, they have no idea whether that's covered or not.
Yeah.
And then when something does happen is when you start realizing like, oh my God.
Yeah, you don't want to wait for something to happen before you learn that way. That's why it is so important to have like an advisor and a professional in the industry that can guide you through it, that's knowledgeable on the product and the product offerings. To your point, kind of like what you mentioned earlier, like how you'll have clients that call you that had bad insurance and ask you like, what do I do? Part of what we like to implement in our practice is talking to the client, educating the client, minimizing the times that a client will call the lender back, and making them feel safe and confident with us that we're the person they're going to turn to when they have an issue. There are a lot of like lenders out there that just send like the name, date of birth, and they say, can you get me a quote and send it back and I'll provide it to the client. One thing we really push back on is having that opportunity to speak to the client, having that time to get all of the facts, get all of the eligibility factors, eliminate the chance that surprises could pop up later about something that we didn't know about on the front end because we never had the opportunity to have that conversation, and to educate them, most importantly, on how they're covered, and to give them their options and discounts as well. They could end up paying a lot less with a quote that I spoke to the client on just because I found out that they are planning on having a central burglar or fire alarm, and we don't have to cut out coverage to get the premium lower. We're just giving them the discount that they deserve because of what they were intending on doing anyways.
Yeah. I mean, it's just like anything, it's like when like you got to stay in your lane, right? It's like you have agents that want to advise on mortgages, and then you have mortgage lenders that want to be agents, and then they want to be insurance agents. And it's like, no, like, listen, you specialize in something and you just stick to it. Cause I mean, it's possible. There are some people that know about everything, but it also, it's a disservice to the client when you try to do everything.
And not knocking them either, because the intention is good. They think that they're doing more for the client that way. And it just goes back to saying that less is more. Essentially, you taking your hands out of it completely and just referring them directly to the professional, you're doing more good for them than you are harm.
Yeah.
As much as you think that you're doing better for them by doing the work for them. It actually, it saves you. It's in the best interest of them. It's in the best interest of the client. It's in the best interest for me as the agent, especially for E&O exposure. If I were to just write a policy through the lender based off the minimum information provided, and then something happens down the road and they weren't covered for it and they didn't know, that can fall back on me because I didn't even have the opportunity to educate them or even get their confirmation that that was the policy they wanted to proceed with.
Yeah, absolutely. So now let me ask you, you mentioned that you're looking to, keep on expanding, right?
Yeah, definitely.
Tell me a little bit more about what are the advantages? What's the cool thing about working as an insurance agent? Why should someone go into the industry?
Yeah, absolutely. I mean, I kind of touched on it earlier, like to highlight, like our job is really making friends. We're not the type of insurance agency that you're going to come into and you're going to get a bunch of purchase leads where you're calling 100 people a day and maybe reaching 2. We actually put a lot of our time and efforts at our agency to actually go out and build relationships with people, like genuine relationships. Some of my referral partners have become really good friends of mine. And then you also develop these people that become genuinely invested in your success, and you grow with them. And on top of it, another point that I made earlier is my brain had to transition from thinking like this is a sales job to realizing that you're protecting people's assets. You're making impact. You're making a difference. So helping people, making friends, like to me, there's nothing more appealing.
Yeah.
And it's just the potential to grow here is huge, especially with our agents. We actually give them the ability to make commission on all of their clients year after year. We give them residual.
Yeah, so how does that work? So I know, for example, you get just say, I mean, we don't have to go into specifics, but
Yeah.
let's say I sell a $1,000 policy. You tend to, like the agency gets paid a percentage of that premium.
So the agency gets paid a percentage of that premium. And then for our agents, we pay them out a percentage of the premium, that the commission that comes into the agency. But we also pay them a percentage of the renewals. So let's say they're with us for 5-10 years down the road. They're getting a raise every year. They're getting paid on every client that they wrote the last 5 to 10 years.
And that doesn't usually happen in all places, right?
No. The background I came from, it was a small commission on every new policy written that didn't reoccur. So it was basically like kill what you eat every year.
Just every year you gotta be just hustling. Yeah,
absolutely. Here we give them the opportunity to actually like build something.
Yeah. Now, what was the difference? Like, one of those, I don't know the size of Goosehead. I think it's pretty big, but like, what would be the difference between working for like a State Farm, Allstate, and all of that to like?
The main thing is the power of choice. Being independent, you're not tied to one product. I know from my State Farm days, it was, not to knock State Farm, by the way, awesome company. I loved my time there. I learned so much there. And they're a great product as well. It's just generally speaking, like as an independent agent, unfortunately, it was hard for me to have to tell somebody I can't help you or your policy's canceling, you're going to have to look elsewhere. With us, since we have the power of choice, we don't have to just assume our product on them. We can find out what their needs are and find the best product to fit their needs. So it's tailored to them. Also, as far as retention, when it comes to they have a huge rate increase or the company's dropping them because of the age of the roof or any other factor, we don't have to tell them, see you later, sorry, I can't help. They come right back to me and we can just place them with the next best option. So it gives us the ability to hopefully be their agent for life.
Yeah. Now, how does it work if let's say I don't want to work, associate myself with like a large company? Like, can I just go and open up an insurance agency and be a broker? Like, how?
Yeah. There's a lot of independent agents out there that aren't under a franchise platform. I honestly, people have asked, would I do that myself? And my honest answer was no. With Goosehead, one, they give the support. They gave me the tools, more tools than I even thought I needed to be able to grow my business. They give us a service team, a fully licensed world-class service team to assist with clients on the back end so they get a more catered experience. And I even let my clients know, and they all get it. Like, we work with so many companies, it would essentially be a sloppy job if I had to understand all of the application sites and all of the servicing sites. So we break it into two departments. We have a department that's very well versed, which would be us, in the initial applications for all of our carriers, getting coverage together, advising on it, and pushing it through. And then we have a whole separate department that's very well versed in all of the servicing sites. So taking care of our clients thereafter for any adjustments they need to make to their existing policies and advising them on their coverage. So that's a huge thing too. I know in my prior history of insurance, I spent so much time dedicated to service work that I couldn't put much focus into new business and put much focus into giving my full attention to my new clients that deserve it. So now I have the ability to really put my focus into helping people out and giving them the full time they deserve on the front end with getting their policy put together, which is the most important phase. So you can't really get that if you started your own thing.
Yeah.
And the technology is just unreal. Our rater allows us to go through 30 plus carriers way quicker than I would if I had to go through everyone individually. So it's also for sake of the client, like I'm not keeping them on the phone all day to shop over 30 carriers.
Yeah.
We have the technology that allows us to get through it pretty quickly.
Yeah, because that's a big thing. I mean, I know a lot of people think, okay, small is good, and sometimes it can be good, but at the same time, once as a company starts growing, it's hard to work on those minor details, such as servicing. Because listen, no matter if you already got the money, but people will still come back to you.
Yeah.
And you need to be able to provide that that experience that allows you to
absolutely.
just keep going back
Absolutely.
and getting
And it all comes down to setting the expectation. Like even with my clients, when I introduce service at the end of every policy, they fully get it. And I always give them the security in knowing like I'm still your agent. So if anything ever goes awry with my service team or they ever drag their feet on anything, I'm the first person you want to come to, so I can be the liaison to make sure that you're always properly being taken care of. And new business applications, they have a crazy rate increase. They're being dropped. We're going to talk again because that's when I step in. That's when new business applications come into play.
Yeah. So what is next? What are your major goals for next year when it comes to your business?
Like I said, 2025 is the year of growth for us. Not just premium, but also growing the team. We really would like to bring on 2 new producers by the end of the year. Top performing producers, put that out there. Yeah.
Let's make sure.
Yeah, top performing producers, give me a call. But yeah, I think growth is the name of the game. We want to build an empire here in the Northeast, and it's not just bring on 2 new producers and stop. It's a year-over-year growth. As the years go on, we want to keep bringing on new producers and just build a mega agency here in the Northeast.
Yeah. Now, what is considered a top producer? Like how much in premiums? Like what would be like a good number where people go like, okay, that guy's for real,
If they're bringing in $1 million in new business premium in 1 year, I won't be mad at that.
Yeah. Yeah. Is that very hard to do? Is that something in the middle?
It's attainable. I mean, I would never ask for anything I wasn't able to do myself or exceed myself. So
now, how because I have seen some agencies that basically say, okay, you know what, let me just focus on kind of like high end, right? Yeah. Or either they go, okay, you know what, I'm not gonna deal with the regular homeowners insurance, but I'm gonna try to just go, in kind of like luxury. Or I don't know if the right word is luxury, but basically, make sure that hey, I'm going after that client that has a $10 million house, or is that much more difficult to do, or is just like something different?
I'm glad you mentioned that. So actually, last year, I actually got access to high net worth space, like your Chubb, your AIG, your Pure. It's a whole different ballgame. It's a whole different discovery. These are people with a lot more to lose. So you're less focused on like the minute details of like, how many bathrooms do you have? And you're more focused on how much do you have to lose? Are you a part of any committees? Do you own many other properties? Do you own watercraft? How much are you worth? How much liability do you need? We need to make sure that, of course, the more you have to lose. We need to make sure that, God forbid, something occurred where that's all at risk, that you have the right amount of liability coverage to protect yourself so you're not losing everything and the insurance is taking care of you. But it's a different discovery. It's a different ballgame. It is different premium, but different quality of service as well. It's a whole different white glove service, but in insurance, you get what you pay for.
Because I'm thinking that's more like I think in your case, you try to, you help everyone, right? But in this situation, absolutely. I'm thinking you really need to get down to the details to make sure that the person is fully covered, because then they could come back and be like, hey.
So it's more of get down to the details of their lifestyle and less about get down to the details of like their home or their auto. Because it's at that point, that type of clients, it's their lifestyle that you're protecting.
Yeah.
But of course, every client treat the same, handle the same. It's just different discovery, different things you need to know, different potential exposures that can occur with a high net worth client as opposed to standard.
Now, besides homeowners insurance, because that's the main thing that we have talked about, mainly because I'm a mortgage lender. But what other types of insurance do you work with?
Yeah, pretty much almost everything, but health insurance. So we do home, auto, commercial, boats, recreational vehicles, life insurance. Everything pretty much but health. And we do, when we take on a client, we're not just focused on the product at hand. We want to look at their portfolio as a whole and make sure that we give them the most economically friendly package. And when it comes to auto too, a lot of people that are buying a new home, they already have auto insurance. We're always going to run it, but we're only going to offer it if it makes the most financial sense for them. So we do want to take a look at their whole portfolio and make sure that they're covered properly across the board and for the best rate.
Does it always make sense for someone to do all have one person for all their insurance needs, or
it makes for convenience, but it doesn't necessarily always make sense. And we're always going to offer it if it makes sense. You know what I mean? Like if somebody has accident free for 5 years and they're getting a huge discount for it, and if something occurs, they don't get surcharged for that accident, and we're coming up like $50 less for the 6 months, I'm not going to offer it to them because it doesn't make sense for them. It would be doing a disservice to them. So we'll always look at the situation, and only if it makes sense, offer it. I've had a lot of times where I ran a quote for a home and the client comes and says, I don't know if I'm going to go with that quote because I got something that's much lower. And my response to them is, I don't want you to insure with us just for sake of insuring with us. I only want to take on your business if we're the best option for you. So send me the other quote. Let me review it. If they are truly covering you the same way and it's a better rate, I'll never steer you away from it. But if they're not, it's important you know the areas where it's lacking and decide for yourself knowing that, because you should want to know those things. You should want to know what things are different about the policy I offered you versus the one that's coming up lower in premium. And what happens a lot is they'll come back to me with the carrier that we actually write for, and it's only lower because it's not covered the same. Or they come back to me with a carrier that we don't write for, and it's only lower because they're missing all of the policy endorsements that I included on their quote.
Yeah.
And I'll even show them, like, if you're okay missing out on these coverages and you know what that means to you, and we match it, we're coming up even lower than that quote was. But the question is, are you okay losing those coverages?
Yeah.
So
yeah, just like anything, like a lot of times we get people that come to us and say, hey, I can get a better rate someplace else, and my answer is like, yes, I would like to see where you're getting that rate from. Many times, there's always someone out there who is willing to do the job for a lot less money. The question is, can they get the job done?
Absolutely. It's knowing your worth.
Exactly.
You might charge more because you know your worth and you know the quality of service
and sometimes,
you're going to provide.
At least in our industry, it just comes down to there's always the old bait and switch, and just like people will tell you whatever they need to tell you to get you in. And then once you're way deep into it, they just basically, hey, it just happens all the time. Because at the end of the day, what I tell people is like all these mortgages go to the same places. It's like there's no specialty, like whoever is charging less is because either they have less people working on the loan, they're doing it. The service is lesser, or there's something that's making it a lot cheaper, and you always have to ask yourself, hey, why is it that this is a lot cheaper? Sometimes people,
lots of times there's a valid reason.
Sometimes it's simple as they're able to close, and sometimes when there's an issue they just walk away.
I see it all the time. Sometimes situations I didn't give an example for. Sometimes I'll get the quote back and it'll be a carrier that I have, and it wasn't eligible because that carrier won't do a home that's built before 1950. And I look at the quote and the other agent put 1950 as the year built for that home. And I'll be like, I have the appraisal from your lender. I know that the home was built in 1920. So people think that it's just getting the agent to offer the quote and locking it in, and that's it. They forget that there's an underwriting process after.
And there's
they forget that
there's
a home inspection after. So it's like, my job is to minimize as many surprises that you can receive later. If you can always get a lower option, but that doesn't mean that it's not going to be loaded and it's not going to be with many surprises after the fact. And to your point, like I disarm people by letting them know up front, it's very easy to get lower premium than this elsewhere. It's very easy to get lower premium than this here with us. But it's not so easy to get lower premium with the same coverage and with the same quality.
Yeah, no, and the thing is that look, like it doesn't help to get a lower price now and then just have a bigger issue later.
Yeah. No, definitely.
It doesn't help. It absolutely doesn't help. Definitely. So now we start to wrap up. I want to know a little bit more about your role in NAREP.
Yeah.
How it has helped your business. Like, let's talk about that.
Yeah, so I was given the honor of coming on as the sponsorship director with NAREP, amazing organization, the Union Essex chapter. We were talking about it a little bit before, but this chapter in particular, before I was the sponsorship director, I was very invested in that chapter and going to the events. And it was just, I met a lot of people that really helped me grow, not just grow my business, but like that I can learn a lot from, that I've built good relationships with. And I basically saw the magic in NAREP before I actually joined in playing a more role as a director. So, but I love it. It's a great group of people. It's a great organization, great mission. They're very big on education and helping people be their best them in this industry and helping connect people, because your network is your net worth. So the fact that they selflessly just want to help build and connect people together so they can grow their businesses, it's like there's nothing better.
Yeah, and your role is to bring in sponsors?
So my role is to make sponsors feel comfortable. Us as directors and anybody, we can all bring in sponsors, but it's just kind of literally directing them. So for events, making sure they're set up, making sure they know they have a table set up, that they can bring materials to grow their business or to market their business, tending to them, just making them feel comfortable, making them feel like they can just come into the event and have the right guidance.
Yeah. I mean, I've been involved, like I was saying, I was being involved with NAREP down in Miami for the past couple of years. Getting a little bit more involved here, trying, trying to not to buy too much, because there are so many other things going on. But I've seen how the great work that you guys do, and it's definitely an organization that anyone who has the opportunity should get involved with.
Absolutely. No, I wholeheartedly agree.
Yeah. So my last question to you is, like any plans for vacations, anything? What's going on in your personal life, man?
So I like to travel a lot. So if I just traveled as much as I possibly wanted to, and left work behind, I wouldn't be able to travel much then. So I do workations. So like I'll take my work with me and I'll go travel with a change of scenery, get a few hours done a day, make myself available. And especially with time changes, it could help, like go out during the day, work during the crack of the day, go out again at night. But I am getting to a point in the business where I want to kind of work on the business and not so much in the business, and put a lot more focus into developing our agency and our agents and their growth and putting more focus there. So that's kind of the stage I'm at now, is just figuring out how to let go a little bit.
It's tough. It's tough. Yeah. That I've said that transition from you're a producer to now you're being kind of like a manager and like a CEO of your, just thinking ahead of what's going to be, thinking more long term. Yeah. It's tough.
Yeah.
It's tough. It's a hard habit to break. It's just, but anyone that wants to grow has to go through it.
Yeah, absolutely. I owe it to my team, and I owe it to their development, and I just need to get through those growing pains and just make it happen.
Yeah, it's the right thing to do. Well, listen, Mohamed, thank you so much for coming over. This was very fun.
Thank you for having me.
Look forward to working with you. I mean, I have worked with you in the past. You're
No,
great.
Likewise. Thank you.
And to a great 2025.
Thank you, man. Same to you. Thank you for having me.
Thank you.